Right now, the stock market looks very strong. The Dow Jones Industrial Average is near 50,000. The S&P 500 is at record highs. Everything looks perfect. But here's the problem. The biggest crashes don't happen when things look bad. They happen when everything looks good. Something is wrong. Let's take a closer look. On the surface, the market is going up, but underneath, something is breaking. The Nasdaq Composite is already showing weakness, and that's important. Because crashes don't start suddenly, they start quietly, when nobody is paying attention. The hidden warning, here's what most people don't see. The market is rising, but not all stocks are rising. Only a small group of big companies are pushing the market higher. The rest of the market is actually falling behind. This is called narrow market leadership. And in history, this has always been a warning sign. Smart money is leaving. Now here's the dangerous part. Big investors, the smart money, they are not buying right now. They are slowly apostasy, taking profits, selling at high prices, and moving their money. But at the same time, retail investors, normal people, they are still buying because they don't want to miss out. This is called FOMO, fear of missing out. And this is exactly what happens before every market crash. History is warning us. We've seen this before. In the year 2000, the Nasdaq Composite reached extreme highs. Everyone was excited. Everyone believed the market would go up forever. But then everything changed. The market crashed and trillions of dollars were wiped out. The same thing happened in 2008. The market looked stable. Banks were strong. Confidence was high. But under the surface, the system was already breaking. And when it finally collapsed, it triggered one of the biggest crises in history. History doesn't always repeat, but it often moves in similar pattern. The bigger problem. Now let's look at the bigger picture, because the stock market doesn't move alone. Interest rates are still high. The Federal Reserve is still fighting inflation, and higher interest rates make borrowing more expensive. Companies have less money, consumers spend less, and growth starts to slow down. At the same time, global tensions are rising. Conflicts, uncertainty, and economic pressure, all of this creates risk for the market. What happens next? So what happens? If the market turns, it doesn't crash immediately. First, you see a small drop. Then, people start to worry. Then, fear spreads. And suddenly, everyone wants to sell. At the same time, that's when panic begins. And that's how crashes happen. Very fast. Very suddenly. We could see a 10% correction, or even a 20% crash. And billions could disappear in just days. The real risk. So what is this? Is this just a normal rally? Is this a bubble? The truth is, nobody knows for sure. But the biggest danger is not the market. The biggest danger is false confidence. When people believe that nothing can go wrong, that's usually when everything goes wrong. Final question. So now the question is, will the market continue to rise? Will new highs come? Are we getting close to a major correction? Or even a crash? What do you think? What do ending? Because one thing is clear. What we are seeing right now is not normal, and history is giving us a warning. The real question is not if a crash will happen, but when.